In our last session, we were talking about the three historical kinds of money, or three historical categories of money. We said commodity money, representative money, and the one we're just about ready to get to is called fiat money. Fiat money. We talked about the 5 physical attributes of commodity money, and the thing that made representative money a separate category is that we went from money as a thing, a physical thing, to an IOU, to some form of a contract, some sort of debt contract. And I want to continue on with more IOU kinds of money. What we're going to be talking about is financial assets, about fiat money, but I wanted to cover these 4 things first. We mentioned what lawful money was, and that goes all the way back to the founding of our country when we were talking about pieces of 8 and thalers and dollars and 371.25 grains of fine silver as lawful money, and this thing called legal tender. So if we pull out a dollar bill, it doesn't really say it's lawful money, it says it's legal tender. In other words, the government, and this really began with Abraham Lincoln in the Civil War. He didn't have enough money to continue on with his, in the North we call it the Civil War. Some people in the South would call it the War of Northern Aggression, but that's a political term whichever way you go there. But he was running out of funds, and so he created money that had green ink on the back, and that green ink therefore was called greenbacks, and to that day greenbacks is a nickname for the money, that the currency that we use. So that's legal tender. And legal tender means that if somebody offers you that paper money and you refuse, well, since you were offered legal tender, then the debt is extinguished because you didn't take what the government said was legal tender for all debts, public and private. So now, and obviously Lincoln did that because he needed to crank out some more money to pay the soldiers in order to win his war. So that brings us down to the monetary burn test. The monetary burn test. We said that money is what money does. We listed 3 things like store of account and measure of value and things like that. But is that always the case? If I would pay somebody, and I do this quite often, I write checks. And if I pay you with a check, have you been paid? If I pay my electric bill with a check and they receive it, they take it in their hand, have they been paid? The answer, at least in our mind, is yes and no. No. We're getting more no's than yeses. And the reason somebody, you said yes, the reason somebody might say no is the possibility of that stamp on it, NSF, non-sufficient funds. It bounced. Boing. Not enough money in your account. So what is that check anyway? It looks like money. It often acts like money, but sometimes people won't take a check because there's risk with a check. There might not be any money in that account. And so I'm saying, well, that check is not legal tender. You give me a $100 bill, I got to take that. You give me a $100 check, no, I don't have to take that. I say, no, give me legal tender, because the government says I have to take that. It doesn't say I have to take your check. So checks work as money, but they're not really money. So if I took a $100 bill and I lit a match to it, and I let her burn there until it got to my fingers, and I let go of it. Have I destroyed any money? Look at me like, what kind of class am I in, really? I mean, you're asking me that? Well, let me ask another question. If you paid me with a check, right, and I took the check, lit a match, light it up, have I destroyed any money? No. And why not? You're right. They're both paper. Yep, they're both paper. There's no value on it yet, I guess. Hasn't cleared. Well, what is that check? How does it work in the economy? Um, it, it's close to a promissory note. Actually, it's your note to your personal banker asking them a favor. Will you take some money out of my account and give this person cash or transfer it into your account? It's simply your personal love letter note to your personal banker. Hi, personal banker, will you do me a favor? And they say, yeah, I'll do that for you. If that's really you, if that's really your signature on there, and I think it is, and so yes, I'll do that for you. Now, if I burn that check, is there any money transferred out of my account? No. So there's been no wealth lost at all because that money's still there in the account. It just hasn't been taken out yet. But if we burn that $100 bill, we've lost some purchasing power. So the check is not money, as we're using the term here. It's simply a note to your banker to take some money out of your account and give it to this person, or take some money and put it in that person's bank account. Similarly, I've noticed when people buy gasoline, they don't pay by check. At least not normally they do. I haven't seen that for a long time, that people pay by check. But they too take this plastic thing out of their wallet and they swipe it and all that sort of stuff. Now, when they swipe that, is that plastic swipe, is that money? Now, wait a minute. If I take the plastic now, I pull my match out, and I burn that plastic, have I burned up any purchasing power? Have I taken any wealth out of any account? No, that's not money either. Well, what is that thing? You got to pay to get another card. If the bank wants to be nasty with you. I lost my card. Give me a new one. Sometimes they'll say, okay, I will give you a new one. Not that one, we'll give you a new one. No, what that is just a small-scale line of credit. That you have a pre-arranged line of credit with the bank that they're going to loan you money every time you swipe that card. They're going to loan you some money, and then at the end of the month, you'd better pay them back the money that you borrowed from the bank. So again, that's just a loan. That's not money. If you never use it, or if you lose it, no money has traded hands. So the burn test, if we burn that card or if we burn that check, have we lost any purchasing power? And the answer is no, and so I guess it's not money. But if we burn a $100 bill, yeah, that's money. Somebody's lost some purchasing power somewhere. Now notice we also have not just credit cards, but there's all those things called debit cards. What is the difference? You guys know. What's the difference between a credit card and a debit card, besides the accounting of credit and debits? Credit's a loan. And a debit is what? Yeah, it's a debit account is say, will you, rather than me writing a check, electronically I'm asking them to take some money out of my account and put it into somebody else's account, only I'm doing it with this little plastic electronic transaction rather than with a piece of paper. So one's a loan and the other is just like an electronic check. Please take the money out of here and put it there. And if there's no money in your account, it says, nope, can't do that because there's no money in your account. So the debit card's not going to work unless there's money to actually move. Now let's talk about monetary liquidity. When we measure the amount of money in the economy, we don't measure people's line of credit. We don't measure how much line of credit they have on their credit cards. We would maybe add up the amount of money they've got in their wallet, or the amount of cash that they have in their checking account. And that kind of money, as well as currency, maybe small change in our pocket, we would add that up. But that's really a small, extremely small part of the total money supply. So if we're going to add up all this money, we only want to add up the money that we say is liquid, because money is somewhere on this scale of liquidity. And so what do we mean by liquidity? Well, liquid, there's a bottle of water here and there's a bottle of water there. If I take it, it's going to pour. It's going to, it flows very easily. When we say something's very liquid, it flows very easily. So we're talking about viscosity, how easy does something flow. And we're saying if this thing that we call money flows very easily from one person to the other, then it's a very liquid monetary asset. But if it flows from one person to another with some difficulty, maybe some, oh, I don't know if I really want to take that money or not, then that money is not as liquid. An obvious example is a stack of $10 bills is more liquid than a $100 bill. Because there are some places, especially late at night, you might have $100, but I don't think you're going to be able to buy any gasoline with that $100 bill, because they put right there, we do not accept 50s or $100 bills after, I don't know, 10, 11 o'clock at night or something like that. And so it's real money. Now, wait a minute. Isn't that legal tender? It says right there it's legal tender. Yeah, it does, but go figure. For the same reason that you can't pay the IRS with pennies. Please don't try that. It's been done before, and it is not a good experiment. Just read about what they do to other people. Don't do it yourself. Are pennies legal tender? Yes, of course they are. But it's making life inconvenient, and you just don't want to make life inconvenient for them, regardless of the law. So all money is on this continuum to being extremely liquid, like small change and small denomination paper, all the way up to paper that flows with difficulty. We get close to a $100 bill, it flows with more difficulty. I am I'm looking for something here. I guess I like that cell phone, Ricky. Would you sell it to me? How much? That's a pretty good deal. Was there something wrong with it? Oh, it's a company phone. Oh, it's my company phone. I can't trace it down because it's a company phone. That was pretty good, I admit. Let's say it was your phone. Let's say it's your phone, your personal phone, and I want to buy it from you. Name your price. Go high, right? Go high. And when do I got to pay? I'd like it right now, but when do I have to pay you this? I don't have $600 on me. When do you want me to pay you the $600? Next week? Put a date on that. 7/23, 2015. Okay, now this is a piece of. I don't have $600 on me. I really need that cell phone like right now to make a really important call. And so I am going to get a piece of paper, and I'm going to write this on a piece of paper, and it says, I owe you, Ricky, $600 payable on 7/23/2000, and I got to sign my name right here. And I promise on a stack of Bibles right here, just to make it more. And I hand him that note. Has he been paid? Will he give me that if I hand him that note? He shouldn't. Why wouldn't he? Well, isn't that what a check is? It's a promise that my bank. No, no, no. But don't we deal in stuff that's not legal tender all the time? Don't we? Checks aren't legal tender. We deal with them all the time. Credit card swipes aren't legal tender. We deal with them all the time. It. If Ricky really wanted to sell this thing for $600, that's not a bad price. And I really want it for $600. Is there any law against me giving him an IOU for $600? I'm going to pay him in a week, and he gives me that. Is there any law against that? Is that a legal transaction? You business law folks. Is that a legal transaction? Do we have two rational thinking people, and do they know what they're doing? Is there mutual consent? Is there consideration? And we're going one step further. We're actually putting it in writing, right? So that's legal, right? So I give him that. And you're saying I didn't pay him? I mean, if I walk out here, you're going to say I stole it from him? I gave him the IOU. Did I steal it? No. Does he have an asset? Yes. He has an asset, and I created a liability. When I created this, he got a financial asset. That same note, to me, is a financial liability, because I owe him the money. I owe him the money. Now, is this real money? That was my original question. You always say, no. Is it just me? Is it just because I put my name down here? What if a bank gave you a cashier's check? And they say, we owe, or we will pay $600 on a such and such a date, and the bank president puts his name and he hands that to you. Are you really paid when he hands that to you? Yeah. Pardon? Pardon? Yeah, well, on this date here, you know. Well, it's not really cash, because only the government's allowed to make cash. It's not legal tender, but do we do business, do we do very much business with IOUs? All the time. I mean, every contract we sign, I promise to pay you so much money if you do this for me and all that sort of stuff. We do that all the time. So when that person gets paid, yes, they legally got paid. And when this time comes, I legally owe him that. He's going to give that back to me, and I'm going to give him $600 in legal tender. Now, here's the question. When I gave Ricky this note, did I create any money? Say yes. Yeah, I created my own money. I did. You know why I know that? Because he gave me the cell phone. Right? He gave me the cell phone. Because he must have accepted money, or could he take that and give it to somebody else and get legal tender for it? What if all of a sudden he goes, I don't know about that Professor Justice guy. He's kind of odd, you know. It just could be that he's maybe having some marital problems and he's not planning on showing up to class at all. I mean, he's got a ticket. I saw him had a ticket for the Caribbean, and after class, he's out. He's gone. He's skipped the whole country. I don't think that he's going to be in class on the 23rd to pay me my $600. So he walks down to some unsuspecting student down there and said, "Do you know Professor Justice?" "Oh yeah." "Well, he owes me $600. See this note?" "Yeah." "And that's his signature, yeah?" "Yep, yep." And he actually stapled his business card to it right there, too, right? I got to be gone on the 23rd, and so he's going to pay me my $600 in class, but I really need $500 right now. So would you give me $500 cash for this $600 note the Professor Justice is going to pay you on the 23rd? Is that a legal transaction? Oh yeah, that's a legal transaction. Okay, and so he takes that note, he gives this to her, and she thinks that she's going to be able to collect $600 I give you $500. I wait a week and I get $600 back. Is that pretty good rate of return? That's a pretty good rate of return, right? So this works as money, and it can actually be converted into legal tender and purchasing power. Now I created that money, and that money exists as long as this note is still open. But once it comes to this date, and I don't show up, and I'm nowhere to be found, then what is the value of this note? It's worthless. Can't find. He owes Ricky the money, but it's worthless, right? Now, Ricky, of course, sign it over on the back to you or whatever to get the $500. I hereby authorize so-and-so to collect this money for me. Okay? Now, so I can create it, but it doesn't live very long. It can only live for a short period of time, and then the purchasing power of that kind of goes back because it has to be redeemed. Now, we're going to pick up with this concept of monetary liquidity and notes. I want to get a little bit further, but we'll pick it up in the next session so we don't make these tutorial sections too long here. We'll take a short break.